Welcome, everybody, to another week of Wealth Wisdom, where we're helping you build wealth and legacy.
Companies are like an organism trying to survive.
It's always a risk when you're investing in a company that's purely tied to someone's brand.
45% of Americans have gone into debt for a Disney trip. Yeah. Bill, have you read that book?
No.
Never Split the Difference by Chris Voss. Very good.
I haven't. I just read a lot of biographies.
Okay.
So I got to get back into some other stuff. I haven't been doing a good job of reading actually the past 6 months.
So it's hard. I find just if I just sit down for 10 minutes, that helps.
Yeah,
I mean, that's all you got to do, right? It's like,
Yeah.
you know, that nighttime or whatever.
Consistency, like everything. Chris Voss was like a former FBI agent, and he was in charge of all the negotiating, and so he wrote a book, and I think it's very good.
Yeah. Yeah, he has some like video content too. He's good.
Yeah, on social. Yeah, it's really good.
He's just like manipulating people and making him think that he cares about them.
I don't know.
Fuck him over.
I don't think that's it.
It's kind of what it is.
No way. He really cares. That's real. All right. Welcome to another episode of Wealth Wisdom. I'm your host, Justin Obi, here with Eric Benz and Bill Ryan with Fox Hill Wealth Management. Today, we are excited to bring you another episode. We are diving into market insights right away. There's a lot of volatility happening this week. And as you all know, you can't escape the word tariff from the news headlines these days. So a lot going on. We're also going to do a special. We are deep in tax season right now with another month left if you haven't filed yet. So we're going to let Bill unleash his incredible knowledge in taxes. And I think it's going to be a really special episode. But let's just kick it off. Eric, what's going on in the market?
Yeah, the headline has been tariffs, right? And
Tariffs.
I feel like every time a new tariff's announced or pulled away, but doesn't matter. The market's trended down like 10% over the last couple weeks.
Yeah.
And why?
Whips on, right?
Yeah.
It's going everywhere.
Yep.
It's a true whipsaw. It's insane. I thought the tax was really going in. I mean, the tariffs were really happening. And then now he announced no. It's a pause again.
Yeah, and it's almost like the market. I think the market doesn't know what to price in, so it's just pricing in the worst now. But the big fear now is stagflation, which is you get high inflation, stagnant economic growth, and elevated unemployment.
Yeah.
So part of the other thing along with tariffs is the DOGE cuts, which is cuts of jobs in the government and also some big government contracts, which obviously brings revenue out to the private sector. So as of November 2024, the U.S. government employed over 3 million people, and that doesn't include the like 1.5 active duty military personnel as well. So let's say the government employs like 5 million people. Okay, so there's going to be job cuts there, the 5 million people.
Yep.
Now the private sector is also hurt because of those cuts. So American companies with large government contracts, those get hurt, those go away. So anecdotally, we actually have multiple clients who from the tech sector that are looking for jobs because tech has made a lot of cuts. We have clients in the academic sector who didn't lose their jobs, but they actually lost out on grant money. Funding from the government pays for research. That's going away. A lot of it has, at least. The fear is if government's cutting jobs, where are those people going to find new jobs? Private sector is not hiring at the same rate it was in the past. So, all right, you're going to have unemployment. Trade war is going to keep inflation rates up, which means that the Fed isn't going to have its tools to lower interest rates to bring down inflation. So that's the thing that's driving all this market panic. There are positives, though, right? There's theory, hey, revenue from tariffs could bring in funds to the country, reduce taxes, and reduce government spending are all tools that the government has to play with. But the reason the market's down 10% is the former that I just spoke about. I don't know if you guys have any thoughts there.
Yeah, there's a lot of uncertainty for sure. Yeah. It's interesting to see in the Mag 7 are getting hammered. There's no more FOMO for the Mag 7 right now.
Yeah.
Yeah, it is interesting to see what's happening. I think the whipsaw effect, it's driving Trump, the uncertainty is truly up in the markets and what I've seen. And I think that's causing bond prices to go higher. 10-year has now dropped. The yield has dropped there. which is actually I think another, maybe consumers are going to get a reprieve, and homeowners are going to get a reprieve there if they
can push some capital back into the market with we're talking about home equity lines of credit.
Yeah.
Those will be going down. You're also, refinancing and things along those lines for people who might have bought a house in the past, year and a half, right? You know what I mean? They might be able to cut down their rate a little bit.
so they can refinance right away.
Definitely a lot of uncertainty. Maybe I know it's tough to look through the weeds right now and say, hey, maybe there's some good things, but those are some good things that are happening for consumers.
So yeah, and the market is now expecting the Fed to cut more rates this year. Like the narrative only 2 months ago was, hey, Powell's, hey, we're not going to be cutting rates this year at all, really. And now the market is
with the stock market being so high right now. It's
So the uncertainty is actually causing increasing expectations for price cuts, which could be good. It's actually interesting if you zoom out a little more. The government has so much debt that they need to refinance, and so the government has an incentive to get the Fed to lower rates so that they can, because all of that, a large amount of that debt is coming due.
Yeah, there's a lot of short-term debt,
and they have to refinance it, and to refinance at these rates right now would be very painful. And that's another interesting thing at play right now. Some people are saying, hey, is this on purpose? Is this because it's like Trump and Powell head to head. Anyway.
Yeah. A lot of levers at play.
Yeah. But you are seeing, bond prices going up. More people are piling in. So that's why the price is going up. And
as we always see when there is stuff, uncertainty in the market, it just causes a lot of volatility. It causes a lot of, companies just don't know which way they're going. Their guidance and things like that on earnings calls are typically lower, right? You know what I mean? Because they're just not
basically
sure
every
what's going
retailer,
on,
Bill.
right? Yep.
Yeah.
So when that stuff comes out, that affects stock prices. You know what I mean? So I am very optimistic that things are going to get worked out one way or another. And, we're still going to be, we're going to look back at the end of the year in a good spot.
Mhm.
But yeah, we're definitely in one at the moment, right?
yeah, are you guys watching Walmart at all? I think Walmart's a really interesting kind of canary in the coal mine, because they have so much pricing with China, and tariffs are going to affect them. They're going back. They have to go back to the negotiation table and try to get prices down, so they don't have to pass the price on to consumers. I think that's going to be an interesting one to watch.
We're going to pass it right on to the consumer.
Costco just came out with earnings the other day, and their guidance and things like that were down. They obviously deal a lot of stuff with Chinese goods and things along that line. So
Why was BJ's guidance better? I didn't read the report. I didn't know if you knew, because they released earnings and had positive guidance and were up like 12% yesterday.
Yeah,
earnings
BJ's
were good. They're opening up more stores. There's just a lot of things in terms of growth that looked really good, and that's why the stock kind of popped up a little bit.
Yeah, that was great. In full disclosure, we that's one stock we do own is BJ's.
Yeah. And what's odd is, we literally, we had Costco for a long time. We recently sold it and switched it out for BJ's. Looks like at the moment, looks like a great trade, as BJ's has been up and Costco has been down a little bit. So see what happens going forward. But, I just know that, Costco, with the amount of goods that they have, they're probably a little more tariff centric than BJ.
Yeah.
Maybe they source more stuff locally. I don't know, or within the country. But we'll see.
Yeah.
I'm not totally sold on all these tariffs going through. I think this is, I hate to say a negotiation ploy, something like that, because I know a lot of people hate that, but I do think that something's going to get worked out, because it's just a lot of negativity for everybody. We're a global economy, right? There's just certain things that other countries do better than us. There's other stuff that we do that's better than other economies. We're gonna lean on each other. I know that there's certain stuff that we want to have done in the U.S., or at least have the ability to ramp up in case something else happens, right? So we want to have at least a portion of it being done here, with the ability to, again, get going really quickly if in the result of something. But I just think that there's always going to be stuff that we're going to be buying from other nations. They just happen to do it better,
Yeah,
more efficient, and cheaper than us. You know what I mean? Cheaper than us. Same thing that we do. You know what I mean? For them, I'm very hopeful that this is a lot of noise, and this noise will get worked out, and things will be looking better. But yeah, right now, right when you're in the thick of it, everything looks terrible. That's the media negativity, everything like that. You look at it, it's just, oh, this is never going to get better. But this will pass, right?
I think people are quick to react, like you said. People forget like that this is the same thing that occurred in 2016, when Trump was first brought in. Lots of market volatility. People hang on every single tweet, and then eventually you just get tired of it. And I assume the same thing is going to happen again. And also, like, the U.S. is a service economy now. They're not going to change it overnight. And tariffs are, I mean, he's trying to build up the industry part of the U.S., right? But that's not what the U.S. does. So I assume a lot of it is fluff.
Yeah, I think that's a little. I mean, we're a service economy, but I think we're still number.
We're
two.
still exporting a lot. We export quite a bit.
You know what I mean? So that's
Like oil.
that's a little bit of a reach there, saying that we only do service. But so
I mean, we're the second largest exporter in the world.
yeah, so we do our fair share. But yeah, no,
We
we do a lot of. You know what I mean?
Wait, export of
service.
what, though, Justin?
a lot of gas, a lot of petroleum,
A lot-
cars, turbo.
Are you sure services isn't included in that?
Yeah, I mean, I can pull it up, but we can.
For a great podcast, guys, doing.
Yeah, you guys, I can't do that. But we are. I mean, we're the second largest exporter.
and manufacturing.
Massive economy.
So
Because literally China over like the last 15 years has been trying to navigate to being a service economy like the U.S. It's been an economic trend.
Sure. Yeah.
Anyway,
But I mean, anyway, at the bottom end of the day, tariffs are just taxes. And I think that let's just bring that into the next segment of the show. Let's get into it here, like tax season, and let's bring it home for people, where it really matters is taxes, because at the end of the day, if you're paying too much in taxes or more in taxes, it's less money that you can spend on your family for all the things that you need. Or if you're a business owner, I've always felt the more I'm paying in taxes as a business owner, the less I can invest into my company. It really does. If you can be smart, I've always felt if you can be smart and strategic with how much you're paying in taxes, you're not paying too much. You're just paying what you're supposed to. That's the goal. But like Bill, how's it going? You're right in the smack dab of tax season.
yeah, things go well. Yeah, busy. I mean, it's just it's a condensed period of a lot of work for everybody involved, and there's a lot of last minute questions and things along those lines. So
What are you seeing, like, people, like, biggest concern clients are facing, or the biggest challenge taxpayers are facing right now?
yeah, I'd say for most people who maybe aren't business owners, right, in a family with multiple people working, things along those lines. I feel like the biggest challenge for a lot of people is just kind of trying to figure out like what their withholdings are, right? There's a lot of issues, and I hear a lot. It's funny, I talk to people, and even though we have changed, the withholding form 6 years ago, people still bring up like, oh, I claim single zero or something along those lines. And I'm like, great, but that hasn't been that case for 6 years. I'm like, I have to politely remind them, no, you don't. You know what I mean?
So wait, what do you mean people should be doing what on that?
No, there's just there's actually the government released a W-4 form, so that's kind of like what you do for your withholding if you're a W-2 employee, right? If you're a business owner, you have to probably also make quarterly estimates, and that's where it's really important to keep really good books and stay up with your books so that you can make these quarterly estimated payments because you know what your profits are, right? But for people who W-2 employees maybe have some, investments, real estate on the side, stock market investments, or maybe, side hustles, things along those lines. You just got to make sure that you're withholding enough from your paycheck. And if there's two people who are working in the family, you just have to make sure that, a lot of times you have to withhold extra. You can't just put down
Okay.
Yes, I'm married. Yes, I have kids and something else. You have to incorporate other income that you receive from investments. You have to incorporate, hey, that other person's working. That's gonna, raise us up. We're a progressive tax system, right? So it's the more money you make, the more money you get taxed at, and it's a bracketed system. So it's each additional dollar in that tax bracket gets taxed at that higher rate. It's literally between this bracket and this bracket is 10%. Between this bracket and this bracket is 12%. From here to here, 22, 24, right? 32, and on up. So you have to keep in mind, maybe one person makes a lot of money, the other person doesn't make as much. And they're saying, oh, I'm having a lot of tax taken out. But when you add those incomes together, know that your marginal rate's at 32%. Here at me, and so they're only having, I don't know, 15% come out, and that person makes 100,000, and now the delta on that is thousands and thousands of dollars or whatever it might be. And the more you make, a lot of times people think too, I made more money, I had more taken out. No, the delta actually widens as you make more, if you do not have the stuff filled out correctly.
Okay.
Right? So it's not, you don't end up owing less, you end up owing more. You know what I mean? How you make more money. So it's just important that you work with someone who can go over that, pretty clearly for you. You're not,
In advance.
yeah, it's
more tax planning.
tax
Yeah.
planning and the cash flow planning so that nobody likes to get stuck with an unexpected bill, right?
Right.
And, it's something that's very avoidable. You know what I mean? That if you do things correctly. So you just have to make sure, though, that you do it in advance so that you're not getting hit with a 10, an 8, a $20,000, a $40,000 bill more than you were expecting. It throws off for you.
You just said also that business owners, paying quarterly estimated taxes. What happens if a business owner, if they're listening, they don't do that? Is there there's a penalty, right?
There is an underpayment penalty, that you can get hit with. So that's one aspect of it. Another thing is that if you don't have the money, it's very tough to catch up because you essentially have to make double, right? You know what I mean? Like we would think about it, right? If you're paying back a tax bill and you make $100, you're behind that, right? You really now only have $40 out of that 100, because you're essentially being double. You're almost like being double. It is, right? It's like double tax if you have not, stayed up with it.
Mm-hmm. Yeah.
Yeah. So it can get behind in a hurry. So you really just want to make sure you pay those quarterlies and pay up to date, like any bill, right?
Yep. That's interesting. Were there any, like with Trump coming in, were there any last minute changes to tax laws?
No, there's nothing.
Nothing happened.
Nothing this year that came in. We'll see this is the year that.
So that'll be like future looking forward to next year.
So we'll see, you know what I mean? That most of the stuff was through 2025. There's been like little things here and there, but for the most part, we're going to see any drastic changes or extension of kind of where we've been at the last 6 years.
Yeah.
We'll know more of that this year.
Okay. Gotcha.
Are they planning on simplifying the tax code? Like, are they like, I don't know if they had mentioned what they want to do with taxes, the new administration.
There's some talks with that.
They're also saying they're going to get rid of it.
Yeah, they're going to. Yeah, I mean, we'll see what happens, right?
Yeah,
I've heard it all.
I mean,
there's some wild stuff going on. I think
everything's been brought to my attention, and I just I'm not wasting my time thinking about stuff that is
may or may not happen.
Yeah, the rumor mill of stuff, and I've been hearing it for 20 years. People say stuff to me, and I just kind of thinks everything in my power just not to say. I don't know what to tell you. You know what I mean? We'll see what happens. Yeah. It's just not work to me until it happens. I'm not thinking about it in a sense. I mean, maybe we're doing some tax planning, we're thinking about doing some things with clients and say, listen, this is where we're at right now. This is what's potentially being proposed, but we can't make any definitive decisions, until it's in law. We want to have in the back of our mind, but it's not something we're not going to do anything definitively until that happens, I know people, a lot, especially right in the last 10 years or so, you've been hearing a lot of people say, we've got this building debt, how are we ever going to pay it off, right? The only way we're going to do it is, they're going to raise taxes, right? You hear that, a lot. They're going to raise taxes because that's the only way we can really pay off this debt. And, historically, we're at, even though it doesn't seem like it, I mean, they say that we're a low tax rate, but I feel like they've added other taxes. So I feel like we're just paying more in other places. But, I know like in Massachusetts, raising sales taxes and things like that, that's happened. We might be at a low rate compared to where we were. I think up until the Reagan tax cuts, for example, we're paying significantly more.
Much more.
But,
yeah.
But, I don't know if, maybe we're able to make some changes in the government, and some of these government contractors who charge exorbitant fees for the services that they provide the government, maybe they're able to, again, renegotiate some of that stuff, get that to a more reasonable level, and we're able to pay down the debt that way.
Mm-hmm.
I don't know, you know what I mean? So it's one of those things.
Going back to just like the tax returns, and I'm assuming business owners have a bigger, I don't want to say advantage, but they have more incentive to do tax planning with you throughout the year than just like a regular W-2 employee. Is that right?
There's more things you can do. They get taxed on their net income, right? Whereas W-2, you get a W-2, whatever it says on that line,
That's what it is.
tax item. There's not a lot of movement. Whereas again, you talk about putting money back into the business.
Yeah.
There's certain things that you can do where you say, hey, I'm going to get an ROI on this purchase, right? It's going to give me it.
Mm-hmm.
It's going to reduce my taxable income, but it's also going to increase my revenue, right? So as you look to build and grow, you want to take advantage of those things,
Yeah.
And, in that case, also too, like how you take, there's various types of depreciation. There's various things you can do. So you want to outlook, all right, how am I, you might have had a lot of expenses as a year in a business, and you say, oh, my net income's not going to be as high. But do I want to pay a little tax now, or I can push more of the depreciation off into future years? Because I know now I bought a couple things, and these items my revenue is now going to increase.
Right.
Immensely off of these investments. Maybe I'll take more of that and push it off into future years. Whereas my income goes up, the taxes kind of will increase significantly with that. Let's get more of the expense into the future. Right.
Yeah. Yeah. This is the part that like gets me excited about taxes, like the tax planning, the strategy of it all. And then especially if you own a business, there's so much you can do, but it also, I think, correct me if I'm wrong, but it also plays a big role into your investments that you're making, right? Like total expected, where you fall in the tax bracket, and like should you roll over a 401k this year, right? Is it a good year to do that? So I would imagine
should you convert a Roth, you know what I mean? So you have
Yeah.
For example, I was talking to a client, and it's unfortunate, but his business really wasn't doing very well, so he has a major loss and things along those lines. So we were talking about doing Roth conversion in a year where it's like, all right, if you have this huge loss, we already know it's going to be there. You know what I mean?
For everyone listening who doesn't know,
to a Roth IRA.
Just explain the Roth conversion for people listening who might not know.
Yeah. So, typically a traditional IRA is either a qualified plan so money went in pre-tax.
Yeah.
Right. So you didn't pay tax on it at the time. It's growing tax deferred, but you will pay tax on it when you distribute that money, into your checking account to spend on, goods and services in retirement. A Roth IRA is post-tax money, grows tax deferred, but is tax free.
Right. When you pull out the money from the Roth, you're not paying tax.
Yes. After the age of
on any gains.
Yep. On any gains in retirement. This particular client had money from an old 401k. It had been rolled over into a traditional IRA, an individual retirement account. So you're the, administrator on the account. You decide where the investments go. You have unlimited options and all.
So he had accumulated the 401k at a job, past employer.
Yep.
He still had that. He had to roll it over into something that he could custody.
Exactly.
Yeah.
did that. And then again, this year, unfortunately, we got into a situation where the business it didn't do well, right? Started a business.
Yeah.
I have a bad franchisee agreement, things like that, like looking back. And, with that, it's all right. We have a bad year. What can we do tax planning wise, right? You know what I mean? To kind of take advantage of this. And, we recorded a big Roth conversion. And, by doing that,
Oh, that's great.
It's going to save them probably hundreds of thousands of dollars in retirement on taxes.
As compared to doing it in a good year. So like low income year. So it's a perfect year to do it.
Oh, yeah, absolutely.
Making lemonade out of lemons.
Yeah, exactly. Right. If you think about that, the ROI on that by converting it now, I mean, huge by having that tax free in retirement. So,
But none of this matters unless you're like proactively talking to you, right? Or your tax advisor or your financial advisor, right? I mean, it's all planning. If I'm hearing it correctly, it's all planning stuff.
Yeah, totally. Yeah. I mean, you have to be, honestly, I think any financial advisor really has to have a good understanding of the tax code. I think there's a ton of financial advisors out there who I feel like they want to defer everything. Oh, we're going to defer to your tax advisor, I don't really think you can be a good financial advisor if you can't, if you don't have a good understanding of the tax code. I know a lot of people adjust in investments and things like that, but I feel like you have to be, you still have to have a great baseline.
You have to have an understanding.
Don't get me wrong. You have some questions. You want to check with the CPA, things like that, just for the finer points. But, you really should. I know I'm a certified financial planner. A big part of being a certified financial planner is the tax code, and I think that was, I remember when I was, going through my classes and stuff like that, a lot of people I were talking to, they were having a lot of difficulty with that, with the fact that they didn't know the tax code, that they were strictly in a investment management position or something like that. And that was the thing that a lot of people struggled with. But I mean, and we're money managers, and we focus on, investment management and things like that, and trying to beat, total return in the market. But we're also, looking at people's tax situations all the time, trying to take advantage of little things here and there that end up, down the road being big things, being huge things. It's almost like a hidden value add. Yeah. People don't realize now, but down the road it's, oh wow, what they did, that saved me $250,000, or something like that. It's just a massive return that it's just, you just don't see it for 20 years. That's the problem, but that's the type of long range planning you can be doing with taxes to really help things.
I think that's a huge advantage to anyone, listening. I think that's what you need. You need to find that, to have a full team, whether it's all in one, like we offer at Fox Hill, but it's, if not with us, I think any great sports team, they're playing offense and defense at the same time, it's just not offense and investment management and financial planning strategy. It's the defensive parts too that count. A great win is usually defense. Defense wins great games. I was told when I was a kid. And to me, the defense is this tax strategy and the estate planning pieces. It's like that whole picture. I don't know.
But even playing offense, when you finally retire, like Bill has all kinds of strategies for withdrawing when you have all different types of accounts.
That's
pulling from first. Which one are you pulling from 10 years from now in retirement?
Yeah. That's true. I guess that's offense too. Is getting ahead of all that. I always consider the tax strategy defense. It's my money. I'm defending it.
Defending it.
Right. I know. Yeah. No, but it funny. It's, you say that, but down the road, it's kind of gives you an offensive supercharge. You know what I mean?
Totally.
It's almost like you think about scouting department, right? You're putting things in place for the future, right? That are really going to help you out. So like that scouting department on a team, it's setting you up so that the future you have the players in place for sustained success,
We also, on the estate planning side too, there's strategies there. Defensive, Kirk employees, right? How do you hide money from the nursing home? How do you make sure your estate's not taxed too much and close easily upon your passing? All that stuff.
Yeah, avoid probate. And,
Easy for
yeah.
your heirs, right? Setting your heirs up
Yeah.
the way you want to. That's more of the thing, right? Is putting these things in place so that things are decided the way you want, not how everything has to play out, right? You know what I mean? If you wait, you don't do it,
Mm-hmm.
then you're just subject to whatever rules are in place at that time. Whereas if you do that proper planning ahead of time, there's certain goals, legacy, wealth, wealth transfer, keep, holding on to your wealth for your family and things along those lines. You decide, right? When you do it earlier,
Right.
when you don't decide.
Right.
Just like life. Like, I mean, you don't want to get caught on your heels. It's best to be proactive and get ahead of things when you know it. That's, you can apply that everything, from health to everything. I love that more and more. There's so many parallels between health and finance, and it's great. What's I'm interested, Bill. Biggest IRS red flags for audit. Come on.
I hate that question.
Why?
I mean, I honestly, because I don't really know. No, you know what I mean?
Sure.
These are all things that they say.
It's all
Sort of like
hearsay.
IRS agents in the past, but I mean, the number one thing, or the traditional things they've always looked at are business travel, business meals, entertainment, use of vehicle, right?
Yeah.
People try to write off too
Off
much
miles.
entertainment, too much travel that's not relevant, or isn't done in accordance with IRS. You know what I mean? To be IRS, and then
What's an example
How
of someone
your
taking
car.
advantage of
too much personal use and trying to write everything off for business purposes.
Yeah. Yeah. Like the home office.
Those are like the three biggest things. So those are the things I always tell people you really want to have, good records on. Yeah, things along those lines.
I had a buddy who bought a SUV on December 29th, like 2 years ago, when he could still get like 100% depreciation. And his argument that he drove it to his office, so therefore it was for work purposes.
Yeah, and basically what you say is you have a home office. Okay.
Right.
So that's where you handle all your administrative. So there was actually an IRS case on a doctor who would do a lot of work from his home. And he deducted the mileage to and from the hospitals that he would go to, and they were trying to say that no, like the hospital was like your place of work, but how he won was that he said that his administrative office was at his house, therefore all the mileage
Okay.
like to or from it was deductible, and that's how that was kind of set the precedent for that there.
Could you write off a work vehicle? He in this case he wasn't deducting miles. He wrote off the whole truck, saying
that's
Yeah,
two
okay.
ways of handling a car. So you either do deductible mileage at the federal rate, so you have 67 cents a mile,
Okay.
and also any financing interest, and then a portion, and then excise tax or things along those lines, whatever your business to personal is. So let's say you had 10,000 business, 20,000 total, right? You get 50% of your interest paid, 50% of your excise tax, and then 67 cents a mile, right? Or you take actual costs. So you depreciate it over 5 years. Again, there was that souped up depreciation that a lot of people were using. And then you take depreciation, repairs, insurance, maintenance, you know what I mean? All those. So you take the actual costs that you had to operate your vehicle.
Wow.
And then whatever, but you're still supposed to keep track of your mileage. So you still want to keep track of what was business and what was personal.
Got it. Wow. I didn't know that. You can't double dip though. You can't do both.
You cannot do both. No, it has to be either
It's
actual
interesting.
or mileage. And then once you pick one, you're supposed to keep that for the life of the car. So whatever you use, you know what I mean? Initially, that's what you use the rest of the time, right? You might got a real great benefit, that 1 year, but maybe if you if he keeps that car for 4 years, those years might be better off with the mileage.
Can regular employees write off the miles they commute
No,
to
W-2 employees don't receive any
the?
related tax deduction. If you're a
I feel like they should.
No.
For all those hours sitting in traffic, they should get that.
Yeah, but it's a commuting expense.
I'm just kidding.
In
And
the past, you could always take This is prior to 2018. There were work-related deductions that you could take. So let's say you went to one office and then you drove throughout the day. The mileage throughout the day, driving around, that was deductible. But all that stuff went away with the 2018 tax changes. That stuff is set to sunset in 2025. But again, we'll see what happens. And I don't even want to speculate because I mean, personally, I think it's going to get written back in, right? So I think we're gonna continue on the current path that we have, but with other changes like various credits and other things going on. I would say the other kind of red flag is for rental property. When you take a real estate professional designation, that's a highly audited, or typically always was a highly audited designation, because most times with a rental property, it's a passive activity. You get a $25,000 loss, but that gets phased out at $150,000 in other income. So it gets, that loss, if you do have something on the rental property, it carries forward to the next year to get offset by future rents, or you get to take it in the year of disposition so that you sell it. But if you're a real estate professional, you get to take 100% of the loss that year. But there's certain criteria, right? You have to do, you know what I mean? And, you have to keep a log. All the things that people don't want to do, right? I mean, they want the deduction. They don't want to do any of the work behind it. So
you got to do it right.
So that's something that the IRS would, a lot of times try to grab people on and say, hey, give me your logs, Did you meet the 750 hours? Did you meet the 500 hours? Things like that. Show me what you did to do it. And, then someone doesn't have it, and it's, you lose that designation. You know what I mean? And that loss that you took, that's coming right back in as income, So it's something that, it can be very beneficial, but you need to put the time in behind it. And it's, for some people, it's just, it's a passive activity. They want it to be, the real estate professional, get the big deduction, but it really is a passive activity. And that's it. All right.
Yeah, I mean, so just as we wrap up, what's one thing, if just as a takeaway, for people to listen, the biggest, I don't know, it's probably a hard question, but what's one takeaway that people can say, all right, I'm about to file my taxes, or maybe, hey, I didn't do any planning. Maybe next year I got a plan.
Yeah, no, biggest thing right now I just think is, just get it in. But I would always just make sure you file an extension if you're not ready to file, because that's going to save you from what's called, if you do owe, a failure to file penalty, which is 5% a month for 5 months. It could be pretty extensive.
So the extension will save you from that.
Yeah, that's the biggest thing at this phase in the game. But also too, remember, if you are self-employed, you can make contributions to a SEP IRA or other retirement contributions up to October 15th. So that's something to keep in mind as well. If you don't have the money now, but you're going to have it this summer, you can always file an extension knowing that you're going to put that money in. Also make the payment before April 15th, but you can take the deduction later on. That's something to keep in mind.
It's a whole world of taxes. I love it. Yeah. This is great.
Bill, people looking for tax strategy, what's the best way to reach us? Would you say go through the website? Or call in? What do you like people to do?
Best way to reach you, man. Phone.
It's hello at foxhillwealth.com. Come on. Just making plugs. Yeah. Come on.
Sorry if I'm a little tired and cranky these days, But
it's okay. It's okay. We understand. We're with you. All right, guys. Great to see you again. Can't wait till next Friday. Dropping every Friday, Wealth Wisdom coming at you live.
All right.
We should do a live show. All right.
Let's do it live.
See you guys.
You see. Bye.